Hey everyone, Sean here from Guaranteed Rate. Want to give you a fall market update. It's mid-October 2022, and I want to share with you what I'm seeing. So certainly very, very challenging market out there, but massive amounts of opportunity for both buyers and sellers to capitalize on it. So want to share with you with what I'm seeing. So lots of headlines out there. Overall mortgage demand and housing demand is almost at a 25-year low. Okay, we've seen mortgage applications are down about 38%. So the reason for that is a couple different factors. One is there's been a lack of inventory. Generally, people apply for mortgages when they see something they like. With inventory being so low for so long, some people have gotten down on housing and just not looking into their options. But most importantly, it's a couple different other factors, mostly financial factors at play. One, home prices have continued to increase. We've seen home prices appreciate almost 35% over just the last 2 years, and obviously they've appreciated before that as well. So it's an affordability thing. It can be daunting looking at some of these home prices for certain people, so they've taken themselves out of the game. On top of that, now you've got it coupled with mortgage interest rates hitting a 20-year high. Mortgage rates in the news last week said 6.94% on an average 30-year fixed rate. So housing affordability has certainly decreased with mortgage payments going up about 50% to start the year, lost buying power of around $175,000 so far for your average potential home buyer out there. On top of that, you've got economic headwinds. Lots of talk about inflation, lots of talk about the Fed and their tough talk around raising rates, which they have been aggressively doing, and they're expected to continue to do over the course of the next couple months to try to fight inflation and slow things down a little bit. And now we're hearing lots of recession fears enter the news. So all those things are the reasons why mortgage applications are down. So surprisingly, we're still seeing a lot of activity out there. I think it creates opportunity for both sellers and buyers. Obviously, anytime there's challenges in the market, somebody's still doing business. Forecasts for next year, there's going to be $2 trillion in mortgages written. So lots of mortgages going to be written, and millions upon millions of homes will be sold. So the market's certainly not frozen. Sometimes the news media will make you feel like nothing's happening. We're busy, and a lot of the realtors we work with are busy. There is deals happening, believe it or not. People are still buying primary residences, second homes, and investment property just at a slower clip than they were doing earlier in the year and some of last year, which was the craziest markets we've ever seen. Okay, what's not happening? Not a lot of refinances happening so far. Refinances are down about 86% year over year. Although clients and consumers have more equity than ever, it's been a challenge for them to tap into home equity and utilize options like cash out refinances for debt consolidation, home improvements, or even just lowering their rates, because 98% of consumers actually have mortgages below 6% already. So not a lot of motivation or benefit from refinancing right now. However, what is happening, adjustable rate mortgages are increasing in popularity and they're a great product. So big takeaway from you for you is whether you're a realtor or a potential home buyer or a homeowner, consider an adjustable rate mortgage. Educate yourself about an adjustable rate mortgage. It's a great way to fight kind of some of the affordability challenges that we're having. Adjustable rate mortgages generally are the most popular ones are 5, 7, or 10-year loans, or adjustable rate periods, amortized over 30 years, and they can save you interest, decrease your mortgage payment, and ultimately bridge the gap until you either refinance your mortgage into a lower rate, which a lot of experts are predicting that rate's going to come down in the next 12 to 24 months, or sell your house. So find out and learn more about an adjustable rate mortgage. We're happy to educate you on that. If you'd like to set up a time, hit us up. Existing home sales down about 24%. So demand has definitely cooled. Some of the pent up demand has been flushed out as consumers have bought houses, and others have kind of decided to wait and see what's going to happen with the market. We're seeing a lot of kind of people not sure what to do. So a lot of people are deciding to do nothing. Inventory also is starting to cap out here in the fall, which is normal. Usually this time of year is when inventory starts to decrease, heading into Thanksgiving and Christmas and the holiday season. And then we see it pick back up in the spring market. A lot of sellers we're talking to are saying, I'm going to wait until the spring when they think demand will be a little bit higher than it is right now. Okay. But the common question I get is there a housing bubble that's about to burst, or is the housing market crashing? Absolutely not, in my opinion. Okay. Is there a normalization of the market? Yes, there is. But this is different than 2008 to 2010 when things crashed. Okay, for a couple of reasons. Okay, one, there's still not enough homes. There's a massive inventory shortage in our country. Okay, there's about a 2 to 3 month supply, depending on how you review the metrics, and that is definitely still a seller's market. Home prices ultimately generally don't depreciate in a seller's market when there's not enough homes for sale, when demand exceeds it. But more importantly, there's economic factors at play. Our housing market is, I'm sorry, our employment market is very strong. Okay, unemployment's at 3.5%. Income across the country is increased over the last couple of years, which has helped fight some of the affordability issues that our clients are having, because they're making more money so they can afford these higher borrowing costs. There's not a bunch of defaults of mortgages that are occurring across the country. Mortgage defaults at an all-time low. What caused the bubble burst in 2008 to 2010, okay, was all the bad mortgages that were written, which resulted in short sales and foreclosures flooding the market, which increased inventory and which created discounted homes for sale. Okay, I don't think that's going to happen this time, because mortgage defaults at an all-time low, inventory is so low, employment is, the job market's very, very strong, income's up, and U.S. consumers and homeowners have more equity than they've ever had. So if they were in a distressed situation, they could simply put their house on the market, sell it, and cash out, not be underwater, not have to discount a home to make it enticing, not go into a short sale foreclosure type situation. Okay, and then homes are still moving fast. Some of the metrics here, homes are selling in 19 days, days on market versus 16 days just a few months ago. So that's incredibly fast. 70% of the homes that were on the market were happening in 30 days or less. That's a fast moving market, faster, in fact, in 2018 and 2019. Maybe not as fast as the second half of 2020, not as fast as the first half of 2022 or 2021, but still a very, very crisp market. Okay, definitely still a seller's market. So what I noticed is a lot of the homes that came on the market in September and October that were priced accurately, we saw bidding wars on almost 25% of all homes, which is still a fast market. In fact, we saw a lot of waived contingencies even in some of those houses that were priced aggressively. So still signs of a fast moving market. So if you're a seller, if you price right, it's still an amazing time to put the house on the market and cash in on the massive home price appreciation that we've had. If you're a seller, can you get the prices that you could have gotten at the beginning of 2022? No, you can't. Okay, so pricing your house accurately for today's market, which is a different market than it was earlier this year, is very, very important. Okay, but you didn't put your house on the market then, you're not going to be able to sell the prices. It was just a frenzy back then, fueled by pent-up demand and super, super cheap borrowing costs. Different market that we're in right now, even though it's been only a few months. If you're a buyer, it's a great time to be in the market. It's much easier for buyers than it was 6 months ago. Okay, the one drawback is that rates are up, so it does impact your affordability. You should obviously readjust your price points, come to terms with how you have to adjust your budget to be able to afford new things. Consider things like adjustable rate mortgages, 2-1 buy downs, or alternative products. Change up the way you negotiate. We're certainly seeing houses that are sitting on the market. We're seeing price adjustments. We're seeing seller concessions to pay points or 2-1 buy downs. Talk to your loan officer about an adjustable rate mortgage or other product alternatives they have. But you can, as a buyer, have an offer accepted. There's less competition, less stuff going way over asking price. We're seeing mortgage contingencies, inspection contingencies come back, all the normal protections. So it's much less daunting to be a buyer. And keep in mind, if you do win your offer now, experts are predicting that rates are going to start to come down in 2023 and 2024, although nobody's got a crystal ball, but that's what the numbers say. You'll be able to refinance. If rates keep going up, you'll be happy with the rate you got. If they stay the same, then they stay the same. And if they come down, you'll be able to take advantage of it and get a better rate. So all three of those options are pretty good, right? We do expect home price appreciation to continue to increase in 2023. And every single time, if in fact we're headed into a recession, that almost always results in lower borrowing costs. And every single time rates come down, home prices continue to go up. So this is a great buying opportunity, although it might not feel like it. If you're a buyer, you should stay in the market, although you do need to readjust your budget to make sure you're comfortable or make changes to some of your expenses to be able to dedicate more of your income towards housing. So that's also another tip I would give you. So, I think this market's very confusing for sure. Okay, sellers think it's a seller's market. Buyers think it's a buyer's market. Some people don't know what's happening economically with the Fed, with inflation, all these headlines out there. Working with the absolute best team of professionals is more important. You got to lock down a superstar real estate agent We'd love to help you with the mortgage, and we can help you navigate this confusing market for sure. And we'd love to be able to do that, make it less intimidating, because the sellers are winning and buyers are winning, and it's important you stay in this market right now. So don't let the headlines scare you. Give you guys another market update in a couple weeks, but that's where we're at in the middle of October 2022.